There's about $7 trillion that's sitting in the sideline right now in money market funds. Within a Trump economy, there's certain things I think you should watch out for. And from what I'm seeing, I'm going to share these insights with you. He could say one word, one tweet, and it makes the market shoot up. He could say one thing else, it makes the market come down. Just like we've seen with the tariffs that he wants to pass. Dow, NASDAQ, SP 500, they're pretty much at all-time highs. So that can pose a risk to investors looking at this as, wow, these things are at all-time high. I don't think I should really keep investing as much in securities. And we seen one of the biggest investors did a pullback, Warren Buffett. He pulled like $250 billion, put them aside for cash. What he does, let's say it is a quarter, 25% of all the assets that he has, right? 750 billion is still invested, but 250 billion is not. So let's say the market crash, go through a correction, equities go down like 50%. Some of them go down 75%. What do you think he's going to do? He's going to use that $250 billion to buy these equities low. And then he'll ride it out, wait 2-3 years. Sometimes it happens sooner. By the time everything comes back to realization, not only is the value of that $750 billion that will stay invested grow a bit, but the $250 that he had, it increased so much over time that it's probably valued at another $750 billion. So now he has $1.4 trillion of assets. And that's the cycle, the mentality of investing that you want to make sure you're conscious of. If they're not sitting inside of securities, they got to sit in bonds because they have to constantly bring in something in return. And his goal with his team, his company under Berkshire Hathaway is to ensure that he's protecting the assets that they have under management. When we see things at all-time highs, a couple strategies we can do. We can go and buy some of the securities that we feel are at a discount, but you don't have to sell everything because you don't know how far high it might essentially go, and you don't want to miss on that ride up if it does eventually keep going up. Having foot in the ground, what I'm seeing, especially with like renters and such, they do have a sense of falsehood. People are tapped out right now. They're still living in this unrealistic world where rent is this much because they're only making this much and they need the rent to be at this much amount. And unfortunately, that's not realistic for a lot of landlords because of the cost of repairing. The cost of lumber has went up, and Trump recently said he's going to pass tariffs on steel, which could affect so many different things, all the different metals that we have. I don't know if it's going to impact copper because copper is utilized for a lot of electrical that's being done in buildings, steel for high rises, as well as the foundation of a lot of these big constructions. Eventually it gets to a balanced state where people accept this is the reality of what things cost now, and they have to properly adjust to it. And it's the same thing I think that's happening in the rental market. Things stabilize, things are not coming down super cheap because one, landlords do realize that the cost of actually doing these repairs, getting these supplies, as well as maintaining the labor cost has increased, dropping the price so much to a point where it doesn't make sense. It won't make sense because you don't want to be operating at a loss at all. If you had a break-even part, that's even okay. If you're slightly above margin, that's great. For those that are less in the investment side and more operating their own residential place where they're renting part of it and staying in one, it's not so much of a big margin. Sometimes they're operating at an even break point. But of course, the longer you hold on to these property, the more that you're able to get to a higher margin point. But if you look at the long-term cost of maintaining that property, you're like, I'm pretty much at a break-even point. It's really when you sell or you tap into the equity, then you can really capitalize on the increases that can be potentially made. It's not as bad as October, November. I think there's some optimism that's starting to come to people, and they're realizing that things are getting tough and I need to find better ways to save and manage and budget. The bank accounts, as I'm looking at people applying for units that I have, it's not as bad as it was back in October. It was horrible. Like, people didn't even have 1 month's worth of rent saved up around that time. Or if they did have the savings, their income wasn't suffice. Like, a lot of things just didn't make sense. And it wasn't like this back a few years ago when I had another unit which I was renting out. Plus, people are about to get their tax returns. They're filing their returns. So we're going to see an influx. And around the springtime is when a lot of people move. So it can impact so many things. People can move. People can invest in the markets. Who knows? Nobody actually can predict any of that. And that's why you want to make sure you have a good practice of keeping your discipline, whatever that is defined for you. Meaning, if you have a recurring pattern of buying securities, crypto, keep that going. If you are, then you don't have to really worry about all these things that's happening with the market because it really won't matter. At the end of the day, all securities go up, including crypto. The Bitcoin ETF has been one of the biggest return ETFs ever. Like, it does over 100% per year. All right, so Bitcoin is at 95,000 at this time I'm recording this video. So if we look at a 6-month trail, it's up 60% from about 60,000 to 95,000. Let's look at Litecoin, for example, 6-month period. It's almost doubled. So it's ahead of Bitcoin, which usually it does. The altcoins usually are ahead than Bitcoin. And then you look at Ethereum, 6 months, it's not up that much. It's pretty much at a flat pace. I look at Bitcoin and Ethereum kind of side by side to see exactly where the crypto market is. And based on this indicator, for me, I think crypto is still low from where it's going to be. Bitcoin, I feel, went pretty high at the price that it is. These other altcoins have to catch up. Not that Bitcoin is going to plummet. And if it does, I think it's going to rebound at some point in time. I can't say it's going to rebound fast. No way to predict that. But I do think these altcoins are going to pay catch up. At least the major ones. Not all of the altcoins do that. Dogecoin, it's up 149%. So if you got it around 10 cents when it was here, great. You made a nice killing. It reached almost 50 cents at its peak around December 8th. People were very optimistic because they were like, Trump is pro-crypto. Trump is pro-crypto. But he's been pretty silent, except for this one thing that he mentioned back in January. Will he shift focus back on this? Maybe. And if he does, will that stir the market? Who knows? But this man, his tweet impacts the market so much. That's why you want to be on the lookout. As much as I don't get involved inside of day trading, but it creates opportunities, because he's saying one thing that can plummet everything, and it creates opportunities for you to buy some more. I would say if it does plummet, don't sell off. Don't be like one of those people that panic. He said this, the whole world is going to end. That is not going to happen. For me, because I'm a person of faith, until we see those signs that explained in the Bible where the sun is not going to shine tomorrow and the world just start tearing up apart, that's when I feel like the world is going to be ending. And at that point, Jesus Christ is coming back. There's nothing for me to personally worry about. But that's how I look at this. So one of the moves I recently did, I sold all the Netflix shares that I had in my retirement account. I had quite a bit. I bought it around $175 a share, and I sold all of it. And I diversified because I couldn't buy crypto directly with the Charles Schwab's account that I have. I bought into Grayscale that matches those coins. So Litecoin Trust as well as Bitcoin Cash Trust. And in total, 40% of what I had in that account is allocated to those two coins. So I still have a good chunk that's just sitting in other stocks. If I had more cash I was able to put in, I would have left the Netflix and purchased those two different stocks separately. But let's look at Netflix for a second. So the market cap is $417 billion. The PE ratio is at 50. So the PE ratio is something that's automatically calculated. You could use the Yahoo app or whatever app that you use to actually see this number. This just gives an indicator in terms of the revenue that they're reporting and also the price of the stock. So they combine those two to create this PE ratio, and you could use this as an indicator to figure out if a stock is overvalued, is it undervalued, or if it's at a good price. There's no magic number to understand whether something is overvalued. I think the best strategy you can do is compare it to relevant stocks. So that's what I did here. You have Netflix, Walt Disney, Amazon, Apple. Google's not really in the streaming side, but they're more in the tech space, right? So some of these companies or more in the tech sector. So I'm looking at it in comparison to really get a sense of where is the PE ratio for these other investments to see where they lie and compare it to Netflix. And Netflix is at the highest PE ratio. So you could look at that as an indicator, dang, Netflix is overvalued, because the average of these is probably going to be around 30. And I think the median one is probably around 30 as well. So looking at and thinking about that, you might be like, dang, Netflix is pretty much highly overpriced. But let's take a step back and try to analyze the business model of Netflix. One, they got their ad tier. So I actually switched over my subscription to the ad tier because I upgraded my Verizon service. They were offering that for free for a year. So that cost my $24 in cost to zero for at least the first year. That saves me about $300 something. Great. And I'm upgrading my Verizon service cost me extra $10 a month. So saved a lot of money there. That's the reason I did the switch. But they have the ad tier service, which bring in more revenue from different advertisers. So you got to think about all the brands and how much of the market is spent on advertising. It's quite a bit. Every single day, we're throwing ads constantly. And that's why Facebook and Google can milk these companies over and over to advertise on their platforms, because Netflix opened up a new growth market for it to increase its revenue. That's what it is. It was pretty much stagnant at one point because they pretty much had all the subscribers in the world. I feel the stock will be valued at probably $2,000, maybe end of next year. That's my own personal thought because of where they're going and how much of the market cap they're taking. If the market crash, it eventually is going to get there. If the market doesn't, they're going to work on their way to actually get there. Compared to Amazon, Amazon is already a big giant. Their PE ratio is at 40. You also got to look at the market cap of these two different companies. So Amazon is at $2.4 trillion. Trillion. You got to think about that. Compared to 400 billion. That's almost 10 times, maybe 8 times what the value of Netflix is. So because of that, their growth is always going to be slower. Their PE ratio should be lower because the higher the market cap, the harder it is for you to beat constant estimates, for you to have that percent profit margin every quarter, every year. It becomes harder. As we can see here, Netflix has a 22%, right? Versus Amazon has 4.1. 4.1 out of 2.4 trillion is a lot of money. So you can't look at it as, oh, the percentage is the only factor I'm looking at. No, see how much in billions that they're actually bringing in to make your determination to see if I'm overbuying this at a too expensive price or I'm getting it at a deal. For me, honestly, I personally wouldn't buy any of these stocks right now. I'm actually pulling away from buying more equities. I'm more leaning towards crypto because I feel like crypto is lower. It's more safer for inflation in the long term. I don't know if crypto is going to pop next month, next year. I have no idea. I cannot predict that. But I feel in the long run, people are going to transfer as the dollar weakens, as things are uncertain. The global currency that everyone has access to is cryptocurrency, where it cannot be manipulated as much. So you got to think about the whole world having access to this. So if they do, then it gives crypto a good chance of stabilizing a lot of the currency and the trading that could potentially happen. But who knows when that's going to happen, when that's going to level off. Crypto right now is under 4 trillion in total asset size across all the different sectors. And we don't know how much that's going to change. But you got to think about the, I think, 900 something trillion dollars of investable and different asset classes that exist in total globally. Crypto only has a bit of that, a dent of that. So imagine if it doubles right now, where things could potentially be. My advice to you right now, try to keep your costs as low as possible. Cancel the subscriptions that you don't need. Downgrade what you don't need. I know we want to live in luxury, but right now really isn't the time to be on that stage. I did that as well. I saw Verizon had all these services I was paying for consolidated inside of their perks part, and I'm paying it, saving about 20-30% of the cost. That's what I did, and I downgraded whichever ones that I could. That allowed me to now have to worry about these other subscriptions elsewhere. It's all inside of my one Verizon bill. Right now, I'm more in the saving mentality, trying to figure out other ways to get cash flow going, focusing on some renovations I'm doing for this real estate, which could potentially bring some more cash flow. And wrapping that up, if the market crash, whatever, that can keep going so I can keep buying into securities as they're at a cheaper discount and enable me to get to a better stance when things shoot back up. It's all a rinse, cycle, and repeat. I'm not liquidating all my equities. If anything, when I did the Netflix sale, I bought the grayscale stocks pretty much right away. Of course, this is retirement account. I can't touch that until I'm like 60 years old. So what's the point of me trying to sit here and day trade with it? Even though you could in a retirement account, you're not going to pay the taxes, the short-term capital gains tax. You don't have to worry about that if you're doing this inside of a retirement account. But I'm not worried about it. I'm not a day trader. I'm more of a long-term guy. If I see something at a discount, I buy it, sit and hold, and I keep buying more and more each time until it gets to a point where it needs to be. Really try to cut costs wherever you can. If you can't afford something, don't do it. Rent-wise, if you're moving someplace to another time, make sure you're making 3 times the rent. If your rent is $1,000, you should be making $3,000 net, meaning after taxes, that's how much you're taking home is $3,000. Then you're at a comfortable place in order for you to afford that. So that way you can save some of your money. I think we should always be able to save 25% for our money. So if you're making $3,000 net, that's $750. And you can also do 401k savings as well. That's another way of saving. If you see that your threshold from your cost to what you're bringing in is too low, you can maximize your retirement as much as possible. So that way you're saving automatically inside of this retirement account. I did that to save about $45,000 at the market where it was at to purchase my first home. And then now the value of that retirement account, I took a loan. I didn't sell it. I took a loan. And I only took about $20,000 to cover the down payment of the property, and the rest of the expenses were all me. At the end of the 6-year period, paying back the loan, the value of that account is at $140,000 about 6 years later. This is the power of compound investments and saving. When you can't save inside of your own pocket, you could do that with your retirement account. I know some people say retirement accounts are evil, but I think it's one of the ways you can save without actually saving. If you see you can't save inside of what you bring in net, use that, because it comes out pre-tax automatically every pay period, and it's going to tie into different asset classes in the market. And if you see the market crash, increase your percentage of contribution. You want to capitalize on when that happens. As Trump is doing his trade wars and you see some of these come down, increase the percentage that you're contributing. I think it's one of the best effective ways in order for us to save. Don't go crazy on your spending habits. Really, where you can cut spending, eating out and all this stuff, condense as much as possible. Right now, we have to get in this mentality of saving and investing in a passive way as best as we can. And if you see opportunities to buy individual crypto, stocks, whatever, then you could do that. A portion of what you bring in should be allocated towards that. So that way you have an opportunity for receiving an extreme growth at one point in time. But don't bet it all on those factors. You want to be completely diversified. In terms of purchasing real estate, again, it's a tough market right now, but I am seeing prices coming down slightly a bit. It's not crashing. With interest rates at its high, it's still expensive, meaning what you can get for the value for your buck back in 2019, 2020, you're not getting that right now. It has become more expensive. Wages have not increased to keep up with the expensiveness of homes, renting, and all these things. So that's why you want to minimize where you can and be in a realistic world. I know some people, they want to live in the private comfort of having their own apartment, but single private spaces are getting more expensive. Studios I'm seeing from where I'm at used to be like maybe $1,100 6 years ago, $1,000. Now you're looking at $1,700 for the same space, going close to the $2,000 space. If you have to share a space with somebody, there's nothing wrong with that. It's temporary. And as long as there's peace and quiet, of course, then it's okay for you to do that. Not pushing you to do that. You have to analyze if you can do with it. It's a different mind state, but you on this hustle and grind mentality right now. So therefore, you want to cut costs as much as you can. And it provides a sense of security as well, because if you're sharing a space with someone, something goes wrong, it's more likely to get fixed because of the fact that the landlord probably is getting a little bit extra margin and they're going to be more responsible for what needs to be done. There are slumlords out there, but I'm just saying from experiences that I've seen for how people have operated, I've seen that work in a good way for both sides, the landlord as well as the tenant. Get on your hustle and grind. Do not think about living lavishly right now. You really got to focus this year. With Donald Trump being president, he makes the market very volatile. It creates a lot of opportunities. So you want to increase your inputs where you see opportunities that you want, that you desire. You think you wanted to buy it here and they got all the way here. Take that as an opportunity to be like, oh, I'm getting this at a discount. And if you see things are here, then you just keep going in your passive mode. And if you see things are here, go into passive mode, but maybe you be less aggressive. It all depends. But you don't really have to worry about that. To me, the way I say it, keep a flat investment. And if you see the market tanks, just do like a one-time extra contribution for when that does happen. So you're not worried sitting here trying to calculate how the NASDAQ SP 500 is doing, because it doesn't really matter. Over time, it all grows exponentially. So I really hope you found all this to be insightful. Stay on the hustle and grind right now. I'm pleading with you. Peace and love. Trust in Jesus. Have an amazing one.
Hustle, 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 step.